So we experienced a breakout of this range here on the S&P 500 last week. And not only that, we actually saw quite a bit of bullish flow just Friday alone. You can see here for SPY, we had a $3.2 million 462 call. So this was not only out the money, but also a lot of premium behind it. Plus, it was also fairly short expiration. So a very bullish print. And also this was highlighted in blue here. So it's a highly unusual order. I will be tracking this order this week for sure, since they are already up, since they did add it a little bit earlier in the session from Friday. But basically what we're seeing here in the macro sense for SPY is a pretty significant breakout of a key downward trend line. You can see this blue line right here that goes all the way back to the all-time high level back from January 4th of 2022. We actually broke out of that as of last week. You could argue that the week before we also broke out of it, but still, this has been the most decisive close so far above this downward trend line, which also means that this rally has more legs to it for more continued upside. Now, one thing I want to preface this video with is Tuesday as well as Wednesday are two very big days for not only this week, but also the overall month in general, mainly because we have CPI on Tuesday as well as FOMC on Wednesday. So two very big days in terms of overall data that will be provided to the market. So a lot of things can shake up. However, when you have two weekly closes above a key downward trend line like we do here on the S&P 500, it's very likely that you will have continuation afterwards. Even if the data this week on Tuesday and Wednesday provides some form of a pullback and we see a little bit of downside, it likely will get bought up by the end of the week. And if not the end of the week, by next week, at least very early into next week, since we are heading into that even more bullish seasonality time period of the Santa rally that goes into the end of the month, typically between December 20th and end of December. So we can be looking for that as of the next week. However, this week can provide an opportunity to add longs for that seasonality. So I will be watching. I'm not going to enter anything based on Monday's price action. However, as of Tuesday, since that is CPI, we can start to see things shake up. It would be beautiful if CPI had some type of a pullback to around this previous range. We get one last retest of not only this red line right here, but maybe even a bit higher around 4,580, since there's a valid golden pocket there if you use Fibonacci. If we had a pullback to around here, it would look like a long entry, assuming future daily candles are able to hold above roughly 4,568, which is this previous range that was traded within for about 2 weeks long, which also is another thing I do want to mention. We traded range bound for the most part for about 2 weeks straight, which is a significant amount of time for the S&P 500 to trade within a range. It also means that once we do break out to the upside, if that is to be the case, of course, with ranges, you can break to the downside or the upside. It's relatively unbiased while you're in the range until there is confirmation. In this case, so far, it is leaning to the upside. And of course, we'll see what happens with CPI and FOMC this week. But let's say that the move is to the upside. We have 2 weeks of basically coiling price action. Think of it as a spring. Whenever we trade in a tight range for a long time on the S&P 500 or any ticker for that matter, you tend to have a coiling effect where it's building up energy until it's ready to bounce. In this case, like a spring, it'll shoot up potentially here to the upside where we'll have a key breakout. So again, a lot of this is dependent on how CPI and FOMC go. However, as long as we remain above roughly this red line here, there is definitely an upward bias for continuation to my eventual 4,700 plus price target by my February date. But so far seems very strong, and it looks like we can get there even before February of 2024, which would be even more bullish if that was the case. And one last thing with the indexes that I want to mention is QQQ here. I've mentioned it in the past. We do have a valid cup and handle, and not only a cup and handle, a multi-year cup and handle breakout in progress right now. You can see here the cup from the last couple of years, as well as the handle that we broke out of from recently. And just based on this structure alone, it warrants a breakout to all-time highs at some point within the first quarter of 2024. Now, that's not my base case. However, my base case right now is more of a conservative target of around the low 400. So there still is another leg that I expect will happen here for QQQ. And similar to the S&P 500, it's best to wait till after CPI lets the price settle for the most part. But as long as we can remain above my pivot here, a little bit higher than the S&P 500 of 392.04, then there is a valid bullish bias from our upside. So again, this is very dependent on how data goes this week, but just based on the levels that I provided to you, the 4,568 for the S&P 500, as well as 392.04 for QQQ here. And then we have a bullish bias going forward. So do make sure that you mark these levels on your charts, and you can base trades off of them. Unlike the S&P 500 though, QQQ has yet to break above the high from the range. So again, we would like to see it stay above here for that bullish bias. Otherwise, if it's unable to stay above, and let's say CPI tanks it down back into the high 380s, we're going to be range bound yet again. And until either the 392.04 breaks decisively or the 383.96 breaks decisively, you're not going to have a break of the range. So it's about a $9 range so far on QQQ. One of those sides breaks decisively, which we're kind of seeing right now to the upside, then you can have a bias in that given direction. In this case, if it is going to be the upside, which is my expectation here, after, of course, that data comes out Tuesday and Wednesday, then we can see continuation to the upside move that already happened before this range began, all the way up to the low 400s, ideally by around that mid-January time period. So that's my expectation for this week, or at least what I'm looking for this week. Very dependent on how CPI goes, as well as FOMC, as well as if we're able to hold key levels that I provided in this video, since a lot of my trades here heading into the end of the year are going to be dependent on key levels holding, since we are fairly overextended just based on the daily at the moment. You can see just been a consistent rally. We did have this cool off effect from this consolidation, so that definitely can help with this additional leg up to the low 400s, but we still are very extended in terms of overall price structure, since we went all the way from the low 340s to 390 in about a month. Very unusual for QQQ to have such a rally. The only time as of recent that it happened was back here in the early summer rally that we saw. So this actually should be bigger than the early summer rally that we saw on QQQ, so I expect even more continuation. However, just based on trade setups into the end of the year, it's better to take those setups with tighter risk, just because of how high up we are right now, which means you have to base those trades off of key levels like I just showed you here with that 392.04 level, especially after key data dependent events. So that's what I will do this week. One last key concept that I want to show you is based on dark pool levels from last week. Something very interesting, actually. Not only did we see a somewhat decent amount, around 2 billion for this 460.20-ish level on Friday in terms of overall dark pool prints. If you look back throughout the entire week and filter here, you can filter on Cheddar Flow for the last week, so December 4th to 8th. You can see here, if you scroll down, very consistent with previous weeks. We had 2.4 billion at 459, and then if we go a little bit lower, 4.9 billion at 458. This is very extreme. And if we go even lower than that, you can see 2.4 billion at 456, 3.6 billion at 456, and then a couple lighter prints around 2 billion plus at this 454 level. Around 453 if you use the previous week as well as this week. 453 to 458 has a lot of premium, like a very unusual amount that you definitely want to watch that range, especially if we do break out to the upside, as that can help with overall bullish bias. So if we're able to stay, especially this week after CPI, as well as that FOMC day, if we're able to stay above roughly this 453, 454 to 458 range, which is roughly around where that red line is that I showed you on the S&P 500. If we're able to stay above this, we're looking at a pretty hefty end of year rally in that Santa rally time period into that first/second week of January. So definitely mark around here on your charts, and you can base it off of dark pool data to be more specific to the actual level. For example, here 456.41 is a key level, but the top of the range, I would argue, is 458.32 because of this about $5 billion dark pool print. Super uncommon to see a $5 billion signature dark pool print on the S&P 500 in a given day. So if we can stay above this range, 453 to 458.32, throughout this week, especially with data, we're looking at a pretty hefty rally to my eventual 4,700 plus price target on the S&P 500. However, it likely will reach a lot sooner if we're able to stay above throughout this week. So do mark these levels on your chart for this week. It's definitely a key range. It is a pretty big range, all things considered, but it definitely is a key range nonetheless that we have to hold for more upside. And if you are bearish, you definitely want to see this range get broken to the downside. Really, you want to see us get back below that key downward trend line that I showed you on the daily chart from over here. If bears were able to get it back below, then we could see a larger pullback, all things considered. But for the most part, it looks very bullish right now, likely to be continuation throughout the week, assuming that data goes well on Tuesday and Wednesday. Other than that, though, as always, appreciate you guys watching this video, and I'll see you next time.